The U.S. Centers for Disease Control and Prevention says it's investigating an apparent increase in invasive group A strep infections. But the rise may indicate a return to typical pre-pandemic levels. Much like flu and RSV, invasive group A strep infections, known as IgAS infections, were curbed by COVID-19 control measures such as masking and social distancing. But in a statement Friday, the CDC said it's now hearing from some doctors and state health departments about an increase in IgAS infections among children. It's too soon to say whether IgAS case numbers are just returning to pre-pandemic levels or if they are rising beyond what we would normally expect based on what we know about gas seasonal patterns, CDC spokesperson Kate Grusich wrote in an email. The recent increases in respiratory viruses, particularly influenza, may also be contributing to a possible increase in IgAS infections. Concurrent or preceding viral infections such as influenza and skin conditions such as chickenpox may increase risk for IgAS infections. The Colorado Department of Public Health and Environment said Friday that it is monitoring an increase in pediatric hospitalizations caused by Group A strep. The rise follows a drop in cases during the pandemic. Cases of invasive Group A strep have been increasing in all age groups, but is especially apparent this fall in pediatric patients, spokesperson Paul Galloway wrote in an email. There have been 11 reported cases of invasive Group A strep in children 10 months to 6 years of age in the Denver metro area since November 1, the department said. 2 children have died, but the official cause of death has not been determined, Galloway said. This month, health officials in the UK advised parents and schools to monitor for strep A infections after the deaths of several children. The World Health Organization said Thursday that France, Ireland, the Netherlands, Sweden and the UK have reported an increase in IgAS infections and scarlet fever, warning that children under 10 are most at risk. Strep A can cause rare infections. Group A strep can cause many types of infections, some relatively minor. Strep A, or Group A streptococcus, is a bacteria found in the throat and on the skin that usually causes fever and throat infections, such as strep throat or scarlet fever. More rare are invasive Group A strep infections, including necrotizing fasciitis and streptococcal toxic shock syndrome. Necrotizing fasciitis is sometimes called flesh-eating disease. It's a rare bacterial infection that spreads quickly and can be deadly, according to the CDC. Group A strep is thought to be the most common cause. Streptococcal toxic shock syndrome, also known as STSS, happens when bacteria spread into deep tissues and the bloodstream. STSS can develop very quickly into low blood pressure, multiple organ failure, and even death, the CDC says. Strep A is not fatal for most people who become infected, and antibiotics are usually effective at treating them. There is no vaccine to prevent strep A infections, and the best way to protect yourself from the bacteria is by washing your hands frequently, the CDC says. If someone does get sick from a Group A strep infection, timely treatment is important, as it can prevent severe illness and complications, Texas Department of State Health Services spokesperson Laura Anton said Friday.
Tesla stock plunges to 2-year low after Musk bans journalists from Twitter. Elon Musk's flagship company Tesla's stock hit a new 2-year low of $150.04 on Friday morning, prompting renewed concerns that the billionaire's recent acquisition and chaotic management of Twitter is crumbling the bedrock of his financial empire. The stock dive took place the morning after Musk booted several prominent journalists from the platform, and after Musk spent the better part of this week offloading more than 22 million shares of Tesla stock, worth over $3.5 billion. Musk has now sold almost $40 billion worth of the electric vehicle company's stock in the last year. Musk's tumultuous takeover of Twitter, a deal which was announced in April and finalized in October, has coincided with a truly abysmal year for technology markets. But Tesla has been underperforming Nasdaq's technology sector index by more than 20 points. As of Friday, the company is down 57.12% year-to-date compared to the NDXT being down 35.53%. The value of the company has plummeted from over $1 trillion at the beginning of the year to less than $500 billion, and has cost Musk his title of world's richest man in the process. Most had voiced criticism of Musk's content moderation decisions. Earlier this week, Musk impulsively rewrote Twitter's content policies to deem any posts including the real-time location data a bannable offense. The platform-wide policy shift appears to have been retroactively created to justify the platform removing the accounts of Jack Sweeney, who tracked the movements of aircraft and private jets through publicly available aviation data. Musk accused journalists covering Sweeney's ban of posting "my exact real-time location," basically assassination coordinates, in direct violation of Twitter terms of service. Rolling Stone has not identified any instances of the journalists posting direct coordinates to Musk's location. On Wednesday, the EV company's third-largest investor Leo Guan tweeted that Musk had abandoned Tesla, and that the company has no working CEO. Following the platform's journalistic purge, investor Joe Sarinchan tweeted a call for Musk to leave Twitter, accusing him of killing the company with his antics. The company itself has admitted that they are highly dependent on the services of Elon Musk, Technoking of Tesla and our chief executive officer, to manage the company. If investors have taken notice, so have major financial institutions. Goldman Sachs cut its price targets for Tesla earlier this week, citing the increasingly polarizing nature of Tesla's branding given Musk's involvement at Twitter, and recommended the company shift back to its core attributes of sustainability and technology. Musk is also facing the threat of sanctions abroad. European Commission Vice President Vera Jourova on Friday accused the company of having violated the EU's Digital Services Act and the Media Freedom Act through its arbitrary suspension of journalists.
The Dow fell nearly 300 points on Friday. Why stocks keep tumbling? The good vibes on Wall Street are fading fast. U.S. SLID tumbled yet again on Friday as investors come to grips with a souring economy. The Dow ended the day down 282 points, or 0.9%. The S&P 500 fell 1.1%, and the Nasdaq Composite was 1% lower. The sell-off has been broad, but the real estate and consumer discretionary sectors were been hit the hardest, down more than 3% and 1.8%, respectively. Sentiment on Wall Street can change on a dime, and this week is evidence of that. The Dow has tumbled about 1,050 points just since the Federal Reserve's dollar policy update at 2 p.m. ET Wednesday. CNN Business Fear and Greed Index, a measure of market sentiment, finally dipped into fear Friday. The market has been in greed mode for weeks. Stocks had been riding high this month on weaker-than-expected inflation and a number of stronger-than-expected reports on the broad economy and the job market. Investors were hopeful that the Federal Reserve could slow its historic pace of rate hikes and inflation could right itself sometime next year without tipping the economy into a recession. That excitement continued right up until Fed Chair Jerome Powell crashed Wall Street's party Wednesday with some tough news. Economists at the Fed believe U.S. gross domestic product, the broadest measure of America's economy, will barely grow next year. And they predict the U.S. unemployment rate will rise to 4.6% by the end of 2023, which means roughly 1.6 million more Americans will be out of work. Compounding fears from those Fed forecasts was a worse-than-expected retail sales report Thursday that sent stocks plunging. The Dow lost 765 points Thursday, or 2.3%, the index's worst day in 3 months. The S&P 500 lost 2.5% and the Nasdaq tumbled 3.2%, their worst days in a month. Now, economists at Moody's Analytics predict America's economy will grow at an annualized rate of just 1.9% in the fourth quarter, down from its previous estimate of 2.7%. Weak manufacturing and retail reports spooked Moody's analysts, who also lowered their 2023 GDP forecast to just 0.9%, much lower than 2022's 1.9% estimate. This leaves little room for anything to go wrong, Moody's economist Matt Collier wrote in an analysis. It's December. Many traders are on vacation, volume is low and tiny moves can get exacerbated. As my colleague Matt Egan notes, the market may be in a lose-lose situation. Good economic news has been bad news for investors, because the Fed is trying to cool down the economy as part of its inflation-fighting campaign. Adobe and Facebook parent company Meta are the market's largest gainers today, up 3% and 2.8%, respectively. Adobe shares soared after the company reported better-than-expected quarterly earnings and guidance. Meta, which is still down nearly 65% for the year, saw a tick after JP Morgan upgraded shares of the company to neutral from overweight.